Hi, it's Edward, back with another video. Please take a moment to click the thumbs up button below and consider subscribing to the channel. Thank you for your support. Today, I read an article on Yahoo Finance written by Megan Henney titled, "Americans Falling Behind on Auto Loan Payments at Record Pace." This article was put out by Fox Business. I'll include a link to the article in the description below. I encourage you to read the full article to support the author and news source. As a private American citizen, I'd like to report and share my transformative thoughts through commentary regarding small sections of this article that are of public interest. According to the article, a growing number of Americans are falling behind on their car payments, an ominous sign for the U.S. economy as high auto prices and stubborn inflation strain household budgets. The article goes on to indicate in September the percentage of auto borrowers who were at least 60 days late on their bills rose to 6.11% according to a Fitch ratings report obtained by Fox Business. That marks the highest default level in nearly 3 decades and is a notable increase from the previous record of 5.93 in January. This doesn't surprise me one bit. A lot of these individuals may struggle to make their vehicle payment right now because their insurance premiums have increased recently. My vehicle insurance has increased recently and nothing has changed in my life. My vehicle is 1 year older. My credit score is the same, my driving record is the same, yet my insurance has gone up. For someone who has a very expensive luxury vehicle or a very expensive sports car, the increase in his or her insurance rates may have been the straw that breaks the camel's back. These people may not be able to afford higher insurance costs and afford the very expensive car payment. Keep in mind, not all vehicles are still under warranty. There are a lot of people that went out in the past few years and overpaid for some used vehicles without a warranty. The cost of vehicle maintenance right now is incredibly high. Not only are parts more expensive than they were a few years ago, but shop rate has also gone up. If you have a luxury import vehicle and you have some type of mechanical problem, it is going to be very expensive in most cases. Even economical domestic vehicles can be expensive to repair at a new car franchise dealership. You might be able to save a little money by going to a third-party mechanic for repairs, but they also have seen their prices go up in recent years. Regardless of who you take your vehicle to for repair, it is not going to be cheap in most cases. There may be some everyday Americans who can barely afford the vehicle repair, and because they need it to get the vehicle repaired in order to have transportation to work, they now have no money left over to make the vehicle payment with. Wages for many everyday Americans have not kept pace with inflation in recent years. There are a lot of everyday Americans who are struggling to cover their bills on a monthly basis. The cost of housing and the cost of food have both gotten incredibly expensive in recent years. People need a place to live. People need food in order to sustain themselves. Some people need to prioritize covering their cost of housing and covering the cost of food as opposed to making their vehicle payment. There are some individuals who have gotten to the point where they simply cannot afford to pay for all of their bills. I suspect there are some vehicle owners who have stopped making payments because they have buyer's remorse. A lot of people went out and paid over MSRP for a new vehicle in recent years. Some people went out and purchased an overpriced used vehicle in recent years. In either case, some of these individuals may now realize they are in a negative equity position in their vehicle and they do not want to continue making payments. There are some people who simply don't care what the consequences are going to be when they stop making their vehicle payments. I'm telling you, there are people out there who intend on driving their vehicle as long as they can before it gets repossessed. It's just like during the 2008 financial crisis. There were people who stopped making their mortgage payments and they tried to live in their home for free for as many months as they could before the bank eventually was able to force them out. This article goes on to indicate the high number of loan delinquencies has not yet led to an equivalent growth in defaults, according to separate data published by Cox Automotive, although it indicated that loan delinquencies rose for the 5th straight month in September. Defaults actually slid 9.8% for the month. Still, defaults are 31.7% from the same time 1 year ago. Here's my opinion. The fact that defaults are 31.7% from the same time 1 year ago seems ominous to me. I could easily see defaults increase in the months and years to come. A lot of people get really excited when they purchase a new vehicle. Who doesn't love that new car smell? But the initial excitement eventually fades. Some people really get excited to show off their new vehicle to their friends and family. Eventually, all of that excitement goes away, but the vehicle payment remains. Continuing to make that vehicle payment month after month after month can become a real struggle for many everyday Americans. Student loan payments resumed this month. Some people may struggle to make their student loan payment and their vehicle payment. There are a lot of individuals who truly believed the government was going to forgive their student loans. Some of these people went out, overextended themselves, and bought an expensive new vehicle. Now these people have to figure out how to make their student loan payments and their vehicle payments. This article goes on to indicate, unsurprisingly, vehicle repossessions are also expected to climb in coming months. Cox Automotive estimates that 1.5 million vehicles will be seized by the end of 2023, up from 1.2 million last year. That remains below the typical pre-pandemic level. In my opinion, I would not be surprised if vehicle repossessions end up far exceeding pre-pandemic levels at some point in the future. Many people are simply too levered up right now. There are a lot of individuals who are doing a delicate dance right now. The house of cards can blow over at any time. Unfortunately, there are a lot of everyday people who are one credit card away from bankruptcy. Think about all of the people with credit card debt that continues to get larger month after month. Credit card interest rates are at the highest level that we have seen in many, many years. This credit card debt can snowball out of control so quickly at these high interest levels. Some people find themselves in a situation where they can barely make their minimum payment on their credit debt, and they don't have enough free cash left over to make their vehicle payment anymore. Keep in mind that we aren't talking about small vehicle loans anymore. The average new vehicle price here in America is approximately $48,000. Some people have gone out and financed vehicles that cost far more than that. There are individuals that roll their negative equity from their previous vehicle into the loan for their new vehicle. Some buyers went out and financed these new vehicles with 72-month, 84-month, or even 96-month vehicle loans. Imagine having a 96-month vehicle loan with a high level of interest. Eventually, you are going to get tired of making that monthly payment, especially if you have a budget that is stretched. I can afford to go out and purchase a new vehicle without a loan, but I have no interest in doing that. I don't want to spend money on a depreciating liability. I also don't want to worry about door dings when I park my vehicle at the shopping center. I once had a contractor that was doing some work for me who was questioning me about my old vehicle. I told him I like driving an old vehicle because I don't have to worry about road rash, dents, scratches. I don't have to worry about little rock chips on the windshield. I simply like having an older vehicle as basic transportation. He had a shiny new crew cab truck and he told me I just gotta have me a new truck. I gotta have a new truck every couple years. I could never drive something old like that. There are a lot of everyday people who think the same way as this contractor. Unfortunately, some sacrifice their financial security by having an expensive vehicle with a big payment. Some of these individuals have no emergency fund, yet they have an expensive vehicle with a large payment. Some have little to no money saved in retirement, but they got their new truck. Some of these people have a lot of consumer debt. They look wealthy driving their very expensive new vehicle, but they aren't wealthy. They actually have a negative net worth. They have far more debt than they have financial assets in their life. What do you think about all this? Share your thoughts in the comments section below. Please keep in mind, nothing in this video is financial advice. If you need advice of any kind, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider giving it a thumbs up. If you haven't yet subscribed, please consider doing so. I want to extend a special thanks to everyone who has subscribed to this channel. I also want to thank all of my channel members. Stay healthy and wealthy. I'll see everyone in the next video.